And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today is Thursday, January the 27th. I'm John Hoagland. Thanks for trusting me with your time. If you are in the markets already, hopefully you've got things going your way. Lots of economic numbers due this morning. Pretty muted response to the 7:30 numbers. But as always, we're going to be checking the charts and looking for context, always focusing on risk management and good patience. 7:30 this morning, the core durable goods came out. They were looking for 0.4%. That's what they got, 0.4%. The preliminary GDP, they were looking for 5.5. Came out a little bit better than that, 6.9%. Jobless claims, initial jobless claims came out exactly as they were expecting, 260,000. A little bit higher in the continuing jobless claims, which is nowhere near as impactful. They were looking for 1.65 million. They came up with 1.675 million, an extra 25,000 in continuing jobless claims. We're still waiting for 9 o'clock's pending home sales and, of course, 9:30 the nat gas numbers. With much to digest today, U.S. stock indices trading steady to higher in early trade. They still remain trading steady to higher. Not a big move today after those numbers. Bond yields in the dollar popped to new yearly highs yesterday after the Fed announcement. Kind of pushing policy changes closer. McDonald's misses this morning on earnings per share and revenue. We're still waiting for this afternoon. One of the biggies, Apple and Visa, due out after the close today. Hey, Lacey. Hey, give me a break, will you? I know, everybody says good morning. And people walking by with the dog. She'll stop shortly, I promise. Crude prices hit another 7-year high overnight, continuing the supply side question with the geopolitical tensions that remain. The VIX off 6% off its high, but still relatively large, still above that 30 number, 30.06 last I checked. The dollar index up 1% off its close yesterday. 97.08, as we mentioned, it put in a new 52-week high yesterday, as did the yield in the 10-year and most of the treasuries. The 10-year yield is a little bit off this morning, but still 1.83%, considerably higher than it started yesterday. So we've got our tasks set out for us. Make sure you hit the lucky like button. Share, question, comment, feedback, and heckling are always welcome. Hit the subscription to our YouTube channel and hit the bell so you can get notifications when we do go live. The folks that joined me yesterday for the group coaching session saw a beginning of a special situation play. We're going to take a look at that in the E-mini S&Ps. But it played out basically almost perfectly to the tick. I love it when a plan comes together. Rarely do they end right at the tick like that, but hey, it does happen. Remember, anything that we discuss here, as far as levels are considered zones, there is no finite in futures trading, and we do the best we can to find those decent opportunities for you. Gotta say good morning to everybody as always. It is Thursday. We got today, we got tomorrow. Let's make the best of it. Jim, first one in the room. You win the prize. Charles, David, good vibes to you as well. Alfred, good morning, my brother. Shaw, good morning. Vince, Brian, Equanimous Trading, good morning from Lombard. Yeah, it's I hope you're enjoying the heat wave we've got going on. It's actually up around 20 today after opening yesterday's session at -5. Terry, good morning. Chris, good morning. Lacey says good morning to you as well. Yes, please. Have a calm, patient, and beautiful day in the markets. It would be wonderful if we could do that. Isaac, Manuel Caesar, Galen, good morning. L. Stewart, Federico, PD Legend, Scott Saw, and he conquered. Angela, the music is choppy, horrible. I am sorry about that. We're working on improving that. Good morning. Finished up the pro account yesterday, but I'd like to practice account while I wait for the live credentials. Hope I'm able to do that. Well, that's something you'll have to discuss with our number one support team. Rob T, good morning. Trading Research. Jay, good morning. First day funded. Take your time, Jay. Take your time. Remember to dance with the one you brung. The processes and strategies that got you here hopefully are going to carry you to incredible heights, of course. HPAC support, Mike, nice doggy. Yeah, she's a little bit like living with a velociraptor. She's a 85-pound German Shepherd, Malinois. I don't know. She was a rescue. And we just got lucky with a really smart, really sweet dog. She's a good dog. I'm picking up good vibrations. Been listening before trading every morning. Calms the mind. Excellent, David. Very happy to hear that. Angela, let's go back to bed. Rocker, hey, who let the dogs out? Rocker, it's good to see you again. I haven't seen you in a while. Maybe you've been stopping by, but just haven't been saying anything. Glad you popped in and said hello this morning. Three Lions Insight, good morning. HPAC, Dr. VJ, Allen, David Keene. Lacey makes my dog stare at the computer with a tilted head. Barks back. Sorry about that. I know it's early. The noise hopefully doesn't wake up the whole house. I'm hoping that doesn't happen here as well. Robert, John, when are you going to start to have a live feed during trading hours? This is something that is always something that we're thinking about, trying to figure out the right way to do it. Since we're not CTAs, we have to be careful with that, as well as some other legal issues that we may have going into that realm. But it's something that we are tossing around. Serviday, Harvester, good morning. Matt, Anas, Robert, good morning. Bron, good morning. We'll be starting the combine next week. Well, good, Bron. Stick around. There's always good content and maybe some good ideas to think about for looking for levels to take executions. Pascal, Sarah, good morning. Liam, Scotch masking duct. We've got some duct tape here, it sounds like. Welcome, Scott. Thanks for popping in and saying hello. That's a new name I don't think I've seen before. Merrick, Michael, Jeff, good morning, good day. Got my cup of coffee right here in one of my favorite mugs, the Who coffee mug. Got that at a Who concert so many years ago. It's actually starting to fade on me. Keith, fix it. Good morning to you as well. All right. We are ready, I think, to go ahead and jump into the charts. Let's have a look. So here is the daily in the S&Ps. Market seems to be trying to find some sort of equilibrium, some sort of balance. We can see that it is a very wide area of balance. Yesterday, after the number, coming off pretty deeply from where we started after the number, we added 14,000 in open interest. Volume was more stable than increasing. There's so much more information to digest today. A lot of it was really not all that response. There was no real huge response after the open, which I think gives us an opportunity to be a little bit more patient today. The market is inside, well, it's in yesterday's range so far. And we're going to go to the 30-minute chart now, and we're going to see what we're looking at today and talk about what we were thinking yesterday during the coaching meeting at 1:30 yesterday in Central Time. So do we have some overnight positioning here? It's questionable. I don't see that there's a huge number of overnight positions in either direction. We started the overnight right about here. Maybe we're starting to get a little bit long, but we're finding comfort, I think, in coming back into the value area from yesterday, showing a little bit of rejection of the weekly kickoff low here, which has been more magnetic. It seems the market is probing both sides of it and unable to make a decision. We don't know when that decision is going to come, but it does offer us opportunities. Price action equals opportunity. Just finding the right area. Where we are appearing to be ready to open puts us into a potential repair. A lot of people say, what do you mean repair? Well, we have the high volume node, which is the point of control up here. There's another high volume node down here. When we open between high volume nodes in double distribution trend days, there is a tendency for the market to go and check both high volume nodes on either side of where the market opens up. There was not a lot of trade allowed in this very fast movement to the downside, and we going to see if there's any business left to do between these two higher volume nodes. Market seems pleased with what it's heard from the early numbers here. It wasn't a knee-jerk reaction, more of a digestion. And overall, I mean, we're in 1, 2, 3, day 4 of a digestive period here. Okay. So what we were talking about yesterday morning, the market opened out of range and out of value from the previous day. We have the knee-jerk reaction from the FOMC release, which puts in the high of the session. It does not bring in new buyers. As a matter of fact, it took us basically to a shorter time frame important inflection level of the naked point of control from back here on the 21st. Brought us right to it, didn't quite get there, so it's still going to remain somewhat valid. And then the market started to peel off and head to the downside. Now, 1:30 to 2 o'clock, we're sitting in the group coaching session, and we're talking about things, and we're discussing concepts and questions and everything. And we notice the market coming into the value area from the previous day. Now, this is something that's in Mind Over Markets, and Jim Dalton he says he doesn't really pay much attention to the value area special situation play, but it played out perfectly yesterday, and we were discussing that possibility during group coaching yesterday. The value area special situation play is when the market opens outside the previous day's range, comes back into range, and reaccepts inside value from the previous day. So the value high is, let's say, approximately 43.55. I need my glasses here. Hang on. 43.55. So value high is 43.55. If the following day, opening outside of range, there's an acceptance of the value area from the previous day, there's a probability that says the market could, at some point during that session, rotate all the way to the low of that previous day's area of value, which was almost a perfect target for the move that did happen yesterday. The value area special situation play is difficult because acceptance is very subjective. But when we opened at the 2 o'clock bar and started moving back into value from yesterday, I said, okay, this is the second 30-minute bar that's attempting to find acceptance down there. I think that's a pretty good probability of a return to the low of value again at some point yesterday, which is exactly what happened. Today, a whole different story. We're opening in range and in value. I'm going to suggest trying to remain patient, wait for maybe the initial balance to establish itself, the early range, and focus on those extremes until something changes. We are really starting to digest this area here. Is it going to remain to be accepted? Are we going to reject it in either direction? Be patient today. We're opening very little change in the perception of value, even with the numbers this morning. So again, try and stay patient. Let's see what's going on in crude oil this morning. I think we're opening out of range and out of balance. So the opening range might be important to us. We had a breakout of our bull flag yesterday. We added open interest. We have maintained volume for the large part of it. So there wasn't a big jump in volume in this breakout to the upside. Money's still coming in on this move to the upside, and you can see there's an attempted continuation of it this morning. Supply is still in question, even after the surprise 2.4 million barrel boost announced yesterday by the EIA. The gasoline inventories were also higher than expected, but this is the supply side sweating it out here. Are we going to have enough? That's the question. Here's the 30-minute chart. Opening with a gap, opening with some overnight longs. So if we don't see continuation to the upside, there may be an opportunity for us to buy a weakness as the session goes on. We have to close that gap first. If we close the gap, that offers different opportunities. We accept inside range from yesterday. That offers deeper opportunities to look for weaknesses. What's the first minute look like? First minute, low of the session, only 10 ticks wide. So you can get long if we were ready for it. You could have gotten long one tick over 88.32, the high of the opening range, and you could put your stop just a couple of ticks down below. So you're risking 15 ticks on this move if you took it when the market broke out above the opening range, which is again the first minute. Obviously, the market is giving us a little bit of what we're looking for. Don't forget we have some long overnight inventory. So it's going to take some new business. It's going to take buyers to come in here and continue this market higher. Right now, with the opening range, the low of the session, opening out of range, leaving a gap, this is opportunity. This is opportunity. Yeah, 80% play, right? More like the 65% play, but I still like those odds, rational investor. Let's take a look now into the Nasdaq. Similar but different. Remember, if you're trading Nasdaq, use information from the Nasdaq. They are a little bit different. Tesla yesterday beat all expectations with their earnings and revenue, giving a little bit of a bolstering effect perhaps throughout the night and throughout today. Volume was pretty slow yesterday. It wasn't a big volume day, which we would expect on an FOMC day. We only added 1,000 in open interest yesterday in the Nasdaq, so there wasn't a real change in positioning. In volume wasn't all that great. The open interest really unremarkable. Volume also somewhat unremarkable. We've got again 1, 2, 3, fourth day inside of range, still testing weekly kickoff level. There's been very little decision away from that level so far this week. Well, when are we going to move away from it? Only time will tell, right? Here's the 30-minute chart. Again, here's where we started the overnight. Here's where we were looking this morning, sitting down to get prepared. Very little overnight inventory. Another difference, we are opening perhaps below value. We are opening below weekly kickoff level here. This might be an opportunity for us. If we get back into value, I'm going to say let's slow down and look for opportunities as the day goes on. I don't think yesterday in the S&Ps or in the Nasdaq there was much of an opportunity until after the FOMC meeting. The only opportunity I really saw that I really dug, especially in the S&Ps, was the value area special situation play, which did play out in the Nasdaq as well. Of course, the lack of liquidity got pretty far deep into it and through value, but it still offered that same opportunity. Acceptance in value after opening outside range gives that opportunity for, at some point during the session, a move to the opposite end of values. We had that happen here in the Nasdaq, again in range, in a short time frame area of balance. I'm going to again suggest trying to stay patient. And when I say that, there's usually an opening range trade that happens right then. Gold, wow, failure above that bull flag, strong dollar from the FOMC. Insights long liquidation. We lost 18,000 in open interest on some higher volume. Oh, and by the way, this is the April contract. This morning, the volume was about at parity. It was about the same in both contracts. So we've moved into April. There is a $2 premium in April over the February contract. So I've adjusted some levels, and it looks like we are. This I can't tell you how often this happens when there's a weekly kickoff level and a trend line in a longer time frame. When they converge, there's usually some good opportunity there. They tend to bring price to those convergence, which is exactly where we are now. That test of the weekly kickoff low, the upside channel low. When we're looking at these channels, or these, somebody mentioned them as Danels because Dan loves to play these channels. You fade the extremes until there's an acceptance outside of it. Is this going to be an acceptance down below? There's swing low here, swing low here. That could be visual targets for the market to try and achieve. Here's the 30-minute chart. Okay, we do have some unfinished business down here. There's an old naked point of control down here at 1794. Remember, the markets are very visual. Look at the overnight positioning here. Here's the breakout the other day. Here's the break back into it. The dollar strengthening, pushing gold lower. Is this a late spike? Does it matter? We've opened below the range. We've got a big gap. We've opened through an important inflection level in weekly kickoff and last week's low. It's a big question now with settlement all the way up here, 1832, and all of these overnight shorts still holding those positions. Are we going to see new business come in and start selling into this market below weekly kickoff low? Sometimes it happens fast, sometimes not so much. But the longer we stay down here, the longer the market's going to be indicating that it is accepting lower pricing. We're going to be looking for opportunities to sell strength. There are lots of opportunities to sell strength. Weekly kickoff, last week's low, this point of control, which still remains unchecked in regular trading hours. The gap close, be a pretty substantial gap close if that were the case. So the 730 numbers did a nice job pushing price a little bit lower. I'm going to probably be focusing some of my potential executions at weekly kickoff low. And we'll take a shot there because, again, these levels allow us the opportunity to limit risk. Euro. What's our pal, the euro, doing? Dollar strength, obviously, finally pushes price below balance, below weekly kickoff low. But it doesn't bring in a whole lot of volume or open interest. Look at the volume from the overnight session and the early session today. We're already at that level that took us all day yesterday, even during the FOMC meeting, even with a breakout to the downside. We only added 200 in open interest yesterday. So the strong dollar creates acceptance now below weekly kickoff low. Now it's a matter of, are we going to continue to see sellers? Are we going to continue to see volume and open interest increase at lower levels? If that's the case, then this breakout to the downside still has some legs in it. Here's the 30-minute chart. Okay. Is basically kind of holding around weekly kickoff low until the information came out yesterday. And in essence, this continuation move to the downside began at weekly kickoff low. Settlements all the way up here, 112.94 and a half ticks. All of our overnight inventory is to the short side. What are they looking for? They're looking for continuation and new business to sell into this market to perpetuate their position on the short side. If they don't get it, be careful, because there could be that, a contrary move back towards the gap close and settlement. That would be a substantial move, but be careful. I don't want to fight this move to the downside, and at the same time, I'm going to be very cautious to demand good trade location, at least in the day time frame, to look for shorts. And for the 10-year, volume a little bit higher yesterday. We added 60,000 estimated new contracts in open interest. We had some interest in selling this market yesterday. As rates continue to move higher, prices of treasuries are going to continue to move lower. We're well aware, and we've already built in some of the rising interest rates. The move yesterday took us relatively close to that weekly kickoff low. We're inside range and inside extended trading hour range today. It looks like the market is ready to kind of sit back and wait for the new information, or any new information. Here's the 10-year 30-minute. So big move. No real overnight inventory right now. I don't see that there's anything big here. It's kind of a matter of, are we going to accept prices below yesterday's range and push us down to weekly kickoff low? If we re-accept inside of range from yesterday, the next thing that could happen is for a kind of a contrary move, some of the late shorts coming back in and looking liquidating some of those new shorts and bringing price higher, which would give us an opportunity at better trade location with which to look for sells for opportunities. Trying to think of anything else I want to say about this. It's really, I think, all about the acceptance or rejection of range from yesterday. Let's take a look quickly here at, whoops, I know this is on the same panel, the nat gas. Here's the daily. So, yesterday we had a test of last week's high. Nice test of weekly kickoff high yesterday as well. Last week's high seems to be the number. We found sellers above that zone yesterday, above that weekly kickoff high. We lost 9,500 in open interest. Was that shorts getting out, or longs liquidating, or a combination of the two? Not all that pleased that we lost all of that open interest. And today is the last trading day for Feb natural gas. So we're going to be on our own. Rollover is officially going to be called over today. The 30-minute chart. We have some overnight longs, maybe. Are we in range and in value? Yes. Does this tell us to try and remain patient? Yes. There's very little change in value of crude oil, natural gas right now. We know that there's a release coming out, the EIA inventory. You may find it more beneficial to wait for some sort of response to that information, again at 9:30 Central today, before getting involved here. When we open in range and in value inside the previous day's extended trading hour range and regular trading hour range, the market is coiling. It is maybe building some energy. We can see we've got lower highs here. We've got higher lows. Maybe a change coming here, but according to volume and open interest, it may be an abrupt change. Right. What else we got here? All right. So there's a look at the charts here. Pinball Wizard. Tommy, can you hear me? Mike. Dancing with, I don't know what you're saying there, Mike. I apologize. Trading research, formerly known as the 80% rule. Yep, I made a video about it a few years ago, and it seemed to be really popular with loads of views. If anybody wants to check it out, hey, there you go, trading research. Excellent. Rational investor. You can call it the 80% play too. Yep. Janus, good morning. Can drive a truck through the 2 and 10 year 26 days. Change it to 22. Started my Top Step Futures at Combine on Tuesday. Braden, welcome. Good luck to you. Good patience. Good context. Keep coming by and letting us know how things are going. Of course. Jay, good morning. Jimmy, hello. And Andrew, maybe some new names here. As always, welcome to the Market Forecast. As well, we are here at Top Step always thinking about ways to help you find your success. This is difficult, we know, and we are part of that journey with you. Mirik, my pleasure. Andrew. All right, so we got about 10 minutes before the equity open. I'm going to give everybody some time to be prepared. Take your deep breath. And stay humble, patient, and creative today. We got some opportunities. You will see me for the Top Step Trading Foundation. Today we're talking about something we discuss here quite a bit. If you have questions about it, make sure you come. Talking about open interest volume and an introduction to Delta and how Delta can help us sometimes fish out some of those longer time frame traders we're all trying to avoid being against. And then I'll see you for the market recap, I believe. Sorry, no recap yesterday. We had the Top Step Trading roundtable yesterday. Hopefully you enjoyed it. Took something away from it that you can use. And let's get down to business. Trade well, everybody. Have a great trading day. We'll see you this afternoon and get out there and profit. I'm going to run down to the proverbial trading pit. I'll see you there in about 5 minutes. Trade well today. We'll see you later.